We're going to go through the 1040 for a married couple that has 2 children. We have Landon Mars and Lauren Peace, and their adjusted gross income is given here as $105,000. Then you can see down here that their itemized deductions is $18,000. You compare that not to the single standard deduction, but to the married. And because this is greater than the itemized deduction from Schedule A, that's the amount of the deduction because you want the higher, because it reduces your taxable income. So the difference between these two is $80,006. To calculate the tax, I have to go to the tax rate schedule for the married, and I'm going to go ahead, I have it up above, so I'm going to go equal. And I have to figure out, this is the married one, and their income, 80,000, what was it, 80,600, falls in the 22% tax bracket. So the 9,086 is the tax on the dollars up through 78,950. So I just now need to add to that 9,860. I need to add the difference, 80,600, minus the low end of this 22% tax bracket, and then multiply that all. So again, I've got the 9,086 here, and then I took the difference between the taxable income minus this low end, and then I'm multiplying that all by the, or not all, but the amount over 78,950 times 22%, and that'll give me a tax of $9,449. So going back to this problem, I'm now at the point where I need to figure out their credits. Okay, before that, we're not going to be using Schedule 2 in this course, so this is basically equal to this, or just some credits. The child tax credit is quite generous. It's $2,000 per child, and they have 2 dependents, 2 children, so this is going to equal 2 times the 2,000. Now it's going to reduce this tax liability here. Now we're going to have to go to Schedule 3 because there's some other deductions that they're eligible for. So the first one, if you earned money in a foreign country, you'd have line 1, not applicable to us, but this one is. They had spent money because of while working, they spent money to having their kids taken care of, so that is a determined amount by the IRS. You'd have to follow the instructions, but that'll be given to you. But here's the big one, the education credit, and that will be applicable to many of you students. The tuition fees and course-related materials are eligible for this credit, so I'm going to go and find the amount they spent on tuition, fees, and course-related materials, and that's this 10,000 for, or this 10,000 right here. What you have to do though is you can only get a credit on the amount you spent out of your own pocket, so we'd have to subtract any scholarships, so that the scholarship is 7,000. So really all that's eligible is the 3,000, the amount that they're out of pocket. So the 3,000, here's how it works. It's very generous. You get 100% of the first 2,000 spent. So they've spent out of their own pocket more than 2,000. So the first 2,000 is 100%. So 100%, sorry, 100% times 2,000. The extra 1,000, that is at 25%. So I'm going to take the 3,000, you can just type in 1,000, but I'm going to show you what it consists of, minus the 2,000 that we already got 100% of. That difference, we get 25 cents on the dollar. So the total education credit for this couple is $2,250. That's quite a bit of money. Now, it's important though that this credit, the additional, is only up to an additional $2,000. So if you spend more than $4,000, all you get the credit on is the first $4,000. The extra amount is not going to help your credit situation. So here, this goes on your Schedule 3. And then that's it for this particular one. So you'd sum these two up. Or I'm going to sum them all, just good spreadsheet practice. And this goes on line 13B. So you can see here that's quite a credit. I'm going to now subtract. Oops, sorry, I forgot to add. We also have to add line 13A to this. So this is equal to the sum of the child credit and the total credits per Schedule 3. So now what they actually have to be liable for is the difference. So credits really help bring down your tax liability. Now as to whether you owe, by the way, this is going to be the same as 14. We're not going to worry about line 15, other taxes. But now here what we do is we go to our W-4, and that's the amount that's already been paid to the IRS, and that comes off of the W-2 of the employee. So as far as now what they actually, if you can see here, they have a tax liability that's a lot less than what they paid. So they're going to get a refund, and that refund is that difference because, again, they overpaid. And that's a nice big check, and you can see a lot of that is from having the children and also having the credit for the education. Again, the education, you get 100% of the first $2,000, and the amount over $2,000 up to $4,000 is at 25%. And that's how you do your last part of your tax 1040.